Sector and group rotation is the name of the game here in the market. In fact, it's quite frankly, it's pretty much always the game, whether we rotate between asset classes, different equities, different stocks, different fixed income instruments, different commodities, all that. What we are noticing here is an opportunity in the healthcare sector. We've been having our eye closely on healthcare. We've had an increasing amount of bullish trends emerging in healthcare equities. In fact, we've seen a lot more of them turn not only from neutral to bullish, but also from bearish to neutral. So we're setting up here for kind of a coiled spring. What's really interesting here, as I'm recording this, and this chart might look different by the time you watch this video, but I want to quickly share with you what the healthcare sector, the XLV ETF, actually looks like from sort of a longer term perspective. And there are other sectors that look like this, but this one here is kind of textbook. So one of our core principles here at Blue Oak Advisors, and also what we use at our investment advisory firm, is we just don't chase. And so you can see here, as I'm recording this here, as of when I'm recording this, we've had a really defined level of resistance around the $140 level in the XLV, again, the healthcare sector ETF for the S&P 500. We then had basically a runaway trade. This has been across the market like this. Healthcare rallied 20%. Now, at some point, when you start breaking above resistance, you're going to start getting to the point where people get exhausted and they start taking some profits. And that here, again, as I'm recording this, you might be watching this a bit later, in which case this chart has changed. But we're getting a retest, a check back, if you will, of what used to be resistance and may now become support. Now, typically speaking, it doesn't, and it can hold like very, very, exactly to that line. I typically see it it typically tends to sink into this line a little bit. So we tend to see, if I were to give you a bit of a better annotation, we typically tend to see, once you have such an extreme move and a breakout, you typically tend to see it sinking into below previous support, i.e. resistance, and then it starts going higher again. But it's pretty textbook here, to be honest with you. On the daily chart, it looks you can see even more like that. But again, this typically takes some time, so it's just nice to see that we get this opportunity. Again, chart chasing is a losing a game over time. A lot of people get very excited right up there, and then it takes literally 1, 2, 3, 4 days, maybe a week, and then erases a lot of those gains, and then we get much better opportunities. And that's the theme this week. We are looking at sector and group rotation. In our product called the ETF Silo Pro, we spend a lot of time going through different sectors and playing that sector and group rotation game. And we have our own proprietary way of measuring which sectors, which are the next opportunities to get long or short. Again, be that a sector, be that a different commodity, be that a different set of stocks like an industry group, a different asset class, and all this can be done through ETFs. It can be done levered with options, but the point is that we can do it with ETFs. If that's a topic that interests you, be that for your retirement account, for your trading portfolio, we would love to see you there. We'll teach you how we do it, what the opportunities are. We have a wonderful, wonderful world of opportunities these days with ETFs. And then again, if we want to lever that, we can use options on that. But really, it's in fact, just yesterday I sat next to a gentleman who was busy on his Bloomberg terminal. He turned out he was managing a leveraged finance fund through the opportunities that even ETFs are using in something as esoteric as, if you will, as leveraged finance. So there's just a lot of opportunities using ETFs. We can play the world with that. So if you're interested in that, use the link down below, and we'll see you in that discussion this week.